Hi, welcome. It's Mary Ellen McGonigal, Senior Managing Director of Stocks here at Simpler. And this is your weekly Edge show for Friday, September 10th. One item before we get started, I did want to mention I am going to be a guest on the Investors.com IBD podcast this Wednesday. That's Investors Business Daily. And there is a link below if you'd like to be sent a recording of the show. I'm super excited about it and would love to share that with you. So let's go ahead and dig in. Take a look at what we are going to be reviewing today. First up, we want to take a look at the current markets. A little bit of a wobbly period here, so we'll take a close look at the S&P 500. From there, we can review news as far as impactful headlines and some of the underlying dynamics that took place as this week progressed. Last up, I'm going to be sharing a new segment called Question of the Week. And this week, the question is derived from one of my MEM Edge subscribers, but it is very relevant to where we are in the markets going forward. If anyone has questions, please, I urge you to go ahead and put them down in the comment section below. So let's take a look at some of these headlines. First up today, we did see U.S. producer prices came in. They rose a little bit more than expected, and this did bring on inflation fears. At this point, we are well above the 2% inflation level that the Fed is targeting. We're in fact closer to 3%, so that of course has people very worried also. But however, on the plus side, we did get news that corona or COVID-19 cases, new cases, were down from last week. So initially that was viewed as positive. We want to be able to get people out moving, traveling, going out more as far as a way to help the economic expansion case. The Fed did come out with a report earlier in the week, and this is something that really got people's attention. It is their beige book where they are examining economic growth, and it did show that from July through the end of August, the economy or economic growth did in fact slow. So that really got the ball rolling in the beginning of the week as far as that negative bias in the markets. And Thursday, we did see jobless claims, weekly jobless claims. They fell to a new COVID low. So good news, but mixed, but overall a little bit on the negative side as far as headline, but even more importantly were negative reactions, that sentiment that you need to pay attention to. Next week, we get a little bit more in the way of data: consumer price index, industrial production, retail sales, and consumer sentiment are due to report, and that consumer segment is very important to the economy as far as expansion. It's 3/4 of GDP is driven by consumer. So from here, let's go ahead and take a look at the broader markets. And here we are with a daily price chart of the S&P 500. And for my work, I like to use these simple moving averages as guidelines. And when the broader markets are trading above this 10-day simple moving average, and then we have nice upward trending momentum indicators, for my work, we are in a confirmed uptrend. We can see that we did close the week below this 21-day simple moving average. This RSI, that's a relative strength indicator, it dipped into negative territory. And then stochastics, this is a faster moving momentum indicator. It's trending, it is still above 50, but heading south, if I may. So overall, the markets at this juncture, I would say yellow flag. We can go back historically and see it's been that type of a year where we hit a new high, pull back, and again, we're just in this very uncertain period with pandemic, economic. Is the growth there? Is it too fast? Inflation and other factors. Anytime we get that kind of an uncertainty is when you will see investors retreat and pull back. We're going to be watching. I have my MEM Edge report. You can use that link below to trial, but it is bi-weekly. But weeks such as what we may experience next week, I will provide alerts on a more regular basis as required, because we want to make sure, first of all, that we find support at this 50-day, but also individual stocks. Is it time to take profits, or can you stay with it? We will get into that with my question of the week as we move further, but let's go drill down a bit further behind the markets. Take a look at those 11 sectors in the S&P 500. We're looking at a 2-month daily price chart of the 11 sectors, and then I've gone ahead and added that RSI, sorted it in descending. So in this upper left quartile, these are your relatively stronger areas as opposed to down in the lower right quartile. So up here in the front, we can see consumer discretionary stocks. They were down, but just a bit for the week, and that's relative to the S&P, which was down 1.7%. A lot of that has to do with both Tesla and Amazon posting very slight gains for the week, and they are heavy weights in here. But there are other bright spots in the discretionary area as well that is helping buoy this particular industry group, certainly this week. Technology actually into the close had a very tough period because we were down a little more than 0.5% before the last hour of today, Friday, and it did push the technology sector down 1.7%, still in line with the broader markets, but it is now teetering here on that 21-day simple moving average at 157. We dipped ever so little, slightly below it, but we can see historically that 21-day has been a very relevant area of support as far as this particular index continuing to trade higher. As we move on, I'm going to share with you a particular area that's holding up remarkably well within technology. But let's take a look at some of these weaker areas. They are financials, materials, energy, and industrials. And these are those cyclical areas that are quite responsive to any economic expansion or deceleration. And this week it was leaning more toward economic growth, with still, yet while it's lowered, a still elevated COVID-19 case numbers, and then also, of course, that beige report that I talked about. So next week will, of course, provide more clues. So we're going to be watching very closely to see if we can have these cyclical areas being reinvigorated, because, of course, the more areas that are participating in the broader markets, the better as far as resuming any kind of an uptrend. So from here, what I want to do is share with you some sub-industry groupings. We're going to drill down just a little bit further, again, with this 2-month daily price chart view. Again, weakness to relative strength up here relative to weakness. But here's that area of technology that I talked about, holding in remarkably well. This is the semiconductor ETF, and we can see that it was poised to hit a new high here, but again, that fizzle into the close. Semiconductors closed down about 0.5% for the week, certainly better than the broader markets. Within semiconductors, there are 3 sub-industry groupings, and there is one sub-industry group in particular that really, it was up over 1% for the week. So I'm going to get more into that with my MEM Edge report once I have time to do a little bit more research. So if you want to get on top of that, you can trial my report. So from here, I did want to go ahead and actually, let's just take a quick look while we are here at the NASDAQ composite, because over the last 2 weeks, the NASDAQ has very much outperformed the S&P 500, and this week, and again, I will show you an intraday, and we can just take a quick peek at the NASDAQ into the close, and that's what we did see in certainly tech and other high growth areas into the close this week. And so the NASDAQ is still above this 21-day simple moving average, again, another index that has had its periods of pullback. So we are going to be keeping an eye on these outside momentum indicators as well, and it traded in line with the S&P 500 this week. So let's go ahead, that question of the week, and it is everything to do with buying stocks on a pullback. And this is important because you want to know, is that stock that either you own or you're looking to for an entry point, is it just pulling back, or is there further downside ahead? So as an example, I'm sharing with you JYNT. This is a daily price chart, and I'm pointing out to you this stock had this big gap up in the beginning of August relative to earnings, and then subsequently for 2 weeks it did pull back. Now, your risk tolerance, of course, for my work, 6 to 8% as a stop loss may have gotten you out of this stock, but the point for here and today is you want to look at historical precedent with a given stock. And with JYNT, we can see that it can pull back to this 50-day and recover, pull back to that 50-day and recover. And sure enough, JYNT did pull back to this 50-day. And then from here, as far as identifying a buy point upon finding support, and from my work it's going to be once the stock breaks back above these shorter term 10 and 21 day simple moving averages, and you can marry that with an RSI that's positive as well as this nice positive MACD crossover. That's your signal that you can get into the stock, and it has advanced about 22% from that downtrend reversal that took place here mid-August. And then another piece of the puzzle that can help provide further confidence is drilling down to an intraday, a 1 hour price chart. This is JYNT, of course, and here is that gap up on earnings and then the subsequent pullback. And we can see too that this can be really quite helpful for an exit signal for shorter term investors, because this break on the RSI below this 50, a break below these simple moving averages. I use a 5 and a 13 hour, and then you're marrying that with a deteriorating MACD, your moving average convergence divergence. But let's take a look at that buy signal on an intraday. So here is that pullback on the daily. It found support at the 50, but on this 1 hour, again, we're going to want to pay attention to a price break back above the 5 and 13 simple moving average. And then as we draw our eye up, we want to marry that with an improving RSI and then an improving MACD as well. And those that are a bit more conservative, you could have waited until the RSI turned very decisively positive, still quite a bit in the way of upside ahead. So that's it for this week. Everyone have a great weekend. Look forward to seeing you next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.